Hey everybody, welcome to a whole new EP. My name is Denzel. For those who are just on the channel, first and foremost, please like, subscribe, all that nice stuff. Like, subscribe, follow, all that. I really hate to say those things sometimes. Let me not say I really hate it, but it's just really not something I look forward to. But it does help the channel out if you guys were to like, follow, and subscribe. All of that, it would really help me out. It comes at no cost, which I think that's the beautiful part about asking for that. Is like it's not taking a dollar out of your pocket. So I'm just here to provide knowledge, here to provide insight into the markets. The whole point of me just going ahead and starting this channel was to do this very thing that I'm doing now. So let's go ahead and jump right into it. I didn't miss out on giving you guys a recap on how my last week, on how week 3 and week 4 of trading went. I think I stopped at week 2. So I've been real busy. The last week I kind of just wanted to spend some time just not focused on work. As some of you may know, watching the previous videos or even joining my live, I do have a day job. So to do my day job and trade can be somewhat of a lot at times where I feel like I'm missing time out on myself or time out with my partner. So I try my best to have a balance between work and regular life. But I'm back at it with this video, and there's a few things that we are going to go ahead and talk about today. So I do have my notebook here, so I will be going ahead and looking at this from time to time. I will be showing you guys my win rate for the month of October, how much I made in total for the month of October. We're going to go ahead and go over that today, just a little brief pop up on the screen on that. And then also too, I will be giving you guys a recap on how week 3 and week 4 went, showing you guys the P&L of that. And then I'm also going to go over one good trade that I had this week in week 4 and a loss that I had in week 4. And I'm going to go ahead and break those down for you. A few key things I want to go ahead and talk about today is mainly position sizing and risk to reward, and not mixing up day trading and swing trading. Having separate accounts. I want to get a little bit more. I want to get more in detail on that, and the reason why I say that is because that impacted my profits on the month. Something that I said I wasn't going to do that I ended up doing. And that's the thing about trading or just doing anything business-wise. If it's not just business, if it's sports, or if it's just something personal. Sometimes we say we're not going to do something, but our emotional state hijacks what we are, trying to accomplish, and then we end up doing what we said that we weren't going to do. And it's not something to beat yourself up about, but it's definitely something that you want to go ahead and, take another look at it, see where you went wrong, and let's go ahead and make some changes from there. All right. So before I go ahead and share my screen and go over a few things, I want to give you guys a little breakdown on how these weeks went. So let's start with week 3. On week 3, and I'll put some pop-ups on the screen as I speak about these things. On week 3, I had a loss of $762. That was week 3. And in week 4, which was this week, I'm recording this video today. Week 4, I made a total in the week $286. So $286 for week 4, and I lost $762 in week 3, right? And there was a few things on what caused some of the losses on week 3. And week 4 wasn't really a bad week. It was just a week I could have made more. I kind of made some mistakes, or some things kind of just didn't really go in my direction the way I thought it would have. But I still ended the week strong, just with $300. I think I only had one red day, so not bad at all. And a lot of the things that really took me forward in this week's, or just overall this month of trading, was risk management. That's why I put in the title how risk management is helping me just keep my profits while I'm options day trading. And risk management has been just like phenomenal this month. I think my profit factor, we could talk about what profit factor is. I think my profit factor for this month is 1.4. My win rate should be about 50%. I put all of these things on the screen. Once again, I think my win rate for the month of October so far is 50%, which is a solid win rate, which means I'm winning and losing, and at half that. You know what I mean? So I really love how I'm trading. And this all just, once again, I say this all the time, it comes from experience. I don't want anybody that's new coming into the markets to think that you can just do this overnight. This takes time. For some people, it takes 2 years, 3 years. For me, it has taken me about 5 to 6 years to see some consistency, to see, opportunities in the market that are not too easy or too familiar for beginners to see, or even those who are more advanced, who are in the market for 3 or 4 years. You still grind out some of your kinks to get better at this field of play. So let's jump to some of these things a little bit more in depth. Once again, I'm going to go over a win that is good. I'm going to go over a loss that was pretty bad in my eyes, right? And I will also want to add, before we get to that again, is position sizing. Position sizing, which you guys are going to see, which I'm going to show you, is position sizing is really the cream of the crop. Your entries, how you get in, but at what size are you getting in? If you guys join the live stream, and please go ahead and join that. I am on live from Monday, Wednesday, Thursday, Friday. For the most part, Tuesdays I'm not on live. But position sizing is everything. The reason why I say that is because when we're talking about position sizing, when you guys see me on these trades, I'm only going in one contract or maybe two contracts, something to catch a feel of the market. And there's one thing that I heard is that if you're going to war, are you going to send all your troops out there to go fight the battle? Absolutely not. You're going to send a select few to go out there to catch the field of play, see what's going on your opponent's side before you start to go ahead and seize attack, right? So it's the same thing with trading. You do not want to put all of your eggs early on in the market. You want to catch a feel. The market might channel, and by channel, the market might go inside this it might trade up and down in a box for like an hour, 40 minutes. Now imagine if you jumped inside a position, 10 contracts or 2,000 shares at the very beginning, and you still have about 4 hours left in the trading day. That could be real impactful to your trading. All right. So I think my dog just barked. So hopefully you guys didn't catch that. But nonetheless, I think position sizing has really helped me a lot. And then also looking at the risk to reward. I did put that on my notes. That's something that I'm trying to go ahead and work on and improve on, is my risk to reward. Not just jumping into a position in hopes that we hit a target. Is that, where are my levels? Where is the channel? Where is the moving averages? Can I use that as a stop loss? Can I use that as an edge to now take price into the direction where I want it to take? Also, preparation. Like you guys see me on live stream for those who join. If not, please once again join on that live stream. When I am on these live streams, I am prepping for at least 40 minutes before the market open, finding levels, finding channels, looking for double bottoms, looking for double tops, triple tops, resistance points, pre-market highs, pre-market lows, previous days high, previous days low. Now I know everything I'm saying is a lot, but this game of trading is not an easy game. It's a real difficult game, and with this game, you have to be prepared. You don't want to go into a football game playing against, let's say, for example, Tom Brady, and you're the defense. And if you're the defense, you need to study film and see what are Tom Brady's tendencies. Where does he like to throw his check down passes to? Where is his best receiver? What does his best receiver like to do? What is their connection? How can the defender disrupt that? It's the same thing with trading. Where are the levels? Where is the resistance? Where can we find edge in the markets to put our position in favor for a proper risk to reward and a greater return? All right. So I hope I said that pretty clearly for you guys. We're going to go ahead and jump on these things, and then let's get right to it. Catch you guys. Come on. All right, everybody. So this is me sharing my screen with you guys. I'm over here screen recording a few things. You guys are seeing a few things that are here on the screen. So let's start off with week 3 and week 4. So please go ahead and look at this side of the screen. I feel like if I maximize this, it's going to be a little bit blurry. So I think this is the best way I could go ahead and show it to you guys. Then we would get to everything else. So let's focus more so on the week 3 and week 4. This looks too digital. So let me go ahead and just keep it the way it is. All righty. So we can see on the 13th of October, I lost about 1,500, 1,530. I'm going to say that. I don't know what the extra numbers are there, but I was down 26%. Then on the 14th, 756. On the 15th, I lost 343. Then I made 938 on the 16th. And then on the 17th, lost 582. On the 20th of October, I went ahead and made 225. On the 21st of this week, this is week 4 now, I lost 558. We're going to go over this trade. And this week on the Wednesday, the 22nd, I made $343. And we will also go over this trade. This was my biggest day this week. And then on the 23rd and 24th, made 116 and 160. So we can see just in the midst of these 2 weeks, week 3 and week 4, we've had a total of about 4 red days, and we had a total of 1, 2, 3, 4, 5, 6 green days. So that's a good thing to notate right there. So the total loss on week 3 was $762.70, and then the total gain in week 4 was $286.28. Now, you guys are seeing the trading scorecard, right? So I'm currently 50% on the month right here with 7 winners and 7 losers thus far, which is a pretty good win rate. But as traders, we don't want to focus too much on win rate. A lot of this is about risk to reward and position sizing, because somebody could have a win rate, right, for example, of 80% or so, right? But they lose big. So, you could win every trade, but you see how my 23rd and 24th. So just imagine there's a trader who makes $100 10 days in a row. And let's say it's 20 trading days. So 10 days in a row, they go ahead, they make $100 a day, but out of those 20 days, 10 of those days are $100. But then the next 10 days are $400 losses, $600 losses, $1,000 losses. Those $100 days will not go ahead and overpower those losses. So I don't want to focus too much on win rate, but where win rate plays a factor is that you do have some type of system that's keeping you within the game to a degree, right? But once again, we don't know how big are those losses, how big are those winners. So we can see here for me, right, I do have some, a good size losses, but my winners are pretty substantial as well, even because I'm going to explain the $1,500 loss, the $500 loss, $600. I'm going to explain all of that. But nonetheless, I am making $700, $900, consistent profits of 100, 300, 200. We're seeing some, consistent large amounts coming in. Now, before we get into everything else I'd like to show you guys, I want to highlight a few things because this plays a factor into why these losses are even here. Why do I have a big loss of 1,500? Why do I have this loss here for almost 400? These two are understandable losses. I went ahead and I overplayed my hand on these 2 days, and I'm going to explain that as well. So before I get to the total, well, I'll briefly go ahead and go over this. My total profit in the month of October is $1,421.26. That's the total that I've made this month. And that's honestly good. If we're looking for supplemental income, an extra almost $2,000 a month is great. I don't know what anybody's salary is. I don't know what people make every 2 weeks. If you have a standard job, whatever the case may be. But if you're going to go ahead and make an extra $1,000, almost $2,000 a month, I would be, pretty confident that this, like you have a system that works, and this is definitely extra income you want to go ahead and add into your financial lifestyle. So let me go ahead and break this down a little bit, right? So I'm showing you guys these things, and this is, I mentioned this before in terms of sticking to one style of trading and not incorporating so much, especially when you are using one account. This loss of $1,500 and this loss of $343 all came from me holding swing positions. This was not a day trade. This was only swing positions. When I day traded on the 13th and the 15th, I'm pretty sure I made money that day, and I think I have proof of that. If I was to click on this box right here, there's one of these days where you guys see I have a realized. Let me try to expand this a little bit. Oh, I can't. But you guys can see here that I have an open P&L of negative 625, a day P&L of 348, and I'm pretty sure this is the 15th. Yeah, go ahead and look at the date right here. Screenshot 10/15. I made $283. So just imagine if I did not have a swing trade in position. then I would have locked in 283. This would not have existed, and this would have added into the week. This would have probably, like, if I would have, if we was to look in hindsight, if I was to go into the 17th and still lose that 582, this 283 would have covered some of that. But because I had a swing trade within my day trade account, that led to that mistake. And I screenshotted this on purpose so I could show you guys this, to let you, just to be really transparent and honest about my trading. So I made the mistake of doing a swing trade, and that's where the 13th came about, where you see this loss right here. I made a good chunk of that back on the 14th and 15th, but at the end of the day, this is why I'm mentioning please stick to one style. I've done this, and I am the prophet here to tell you guys the truth on how this game can go. Stick to one style, and if you have extra money, I don't know how much money anybody's playing with, but if you want to open up another swing trading account, allow that account to take the heavy fluctuations. Do not make your day trading account face the fluctuations, because if you're a good day trader and you're swing trading, you're going to have high volatility within your account, and you're basically just going to be making back losses, possibly off of what those swing trades are probably doing, because swing trades can be underwater for about 3 weeks, 2 weeks. So you have to be mindful of these things. So I wanted to go ahead and show you guys proof that a lot of this is my swing trading in terms of week 3. Week 4, amazing week, right? But I did take a loss, and once again, we're gonna go ahead and go over this trade. So that was the purpose of me sharing this with you guys. Like I said, I wanted to talk about and that's just like something that we don't got to get too much in depth on, right? But it's just something I had to bring up in terms of, because I know some people go ahead and do it, is that they day trade and then they see this swing position and you're like, oh my gosh, I think Tesla is going to go up on a certain date, or this and that is going to happen. And then you go ahead and have an option out or shares out, and you hold that one, and you're like, yeah, let me just hold it and let me continue to trade. It's probably not the best idea because of the fluctuation, and you're not steadily growing your account. Steadily grow your account. If you have a strategy, lean on that and leave it alone. Find another way to make money, or get some extra money in swing trade. Go ahead and leave that alone. All right. So I just wanted to show you guys proof of everything that's going on, how week 3 went, how week 4 went, what is the scorecard for the month so far, how much have I made so far in terms of the month of October, and what did week 3 and week 4 look like. Now I want to go into some actual trading, right? Let's go into a strong winner that I had this week. We're going to go over the 22nd of October and how did this week go. So let me go ahead, expand this. And this is a live stream that I did here. I'm going to skim through it a little bit. We're going to put the vibe down, and I'm going to talk through this trade, right? So while on the 22nd, I traded Amazon, right? So on Amazon, I want to go ahead and focus on right at the market open. So on this bottom screen, don't look at the top because that's AMD. On this bottom screen is Amazon. On Amazon, I did a pre-market prep, and in my pre-market prep, maybe I already have that in play. So let's even go back a little bit. I'm mapping out Amazon. I'm looking at the daily chart on the left side. I'm looking at the smaller time frames here on the right side, and I'm gaining a picture on what is going to happen with Amazon. Now, I also use catalysts. If we look here on the right side in this box, right where my face is at, this is a news part of like the Webull of the Webull platform. In this news part, I'm looking to see what is going on. Sometimes information is there, sometimes it's not. But what made me look at Amazon was the simple fact that Amazon, AWS, which is under Amazon, their web servers were down. So that is somewhat of negative news, because do people feel safe to go ahead and use Amazon's web server? Because it was an outage on Monday. I kind of struggled trading a bit because the servers were out. The servers were not working appropriately. So I missed the morning session. I traded later on that afternoon, and I made some cash. But the point is that led to a catalyst, right? A catalyst which can lead to maybe some downward activity. So I looked at the pre-market and I mapped out the highs and lows of the previous day. This right here, what you're seeing on Amazon, if we're looking at this box where my mouse is, this was what Amazon did on the 21st, right? We have the high being $223.32 and the low being $217.99. You also see that I mapped out the pre-market high and the pre-market low. Now, I will make another video explaining moving averages, what do my levels mean, but that's not the purpose of this video. The purpose of this video is for you guys to see how I'm trading and what is going on, right? So for me, in short terms, I'll make this brief, is that this green line that you guys are seeing is the 200-day moving average, right? And this red line right here is VWAP. Then I also have other lines, the 9 EMA, 20 EMA. This is just information that I like that helps me gain an edge on what I would like to do. I know some people like blanket charts. I do not. I like to gain an understanding where are these things playing around at and let that give me an edge on how I would like to enter my positions, exit my positions, how is price even going to interact. I know some people may think that this is a bit too much, and to a degree it is. To a degree it is a bit much. But once again, for me, this is what helps me out to go ahead and just find my edge in the market. I just want to go ahead and say that again, because I know there's other traders who teach different ways. And, full disclaimer, I'm not a financial advisor. And then also, too, not only am I not a financial advisor, my style of trading may not work for you. All of this that I have in my chart may not work for you. This works for me, and because a lot of the time I could care less about the levels that I put on too much. I just use it as a formality to help me be decisive and see how is price action even reacting. That is it. Some people may look at this like, and I used to do stuff like that where I see a level of moving averages and I'm like, oh man, it's going down off of this level. I got to take it. I've outgrown that. Like, I draw some of these things and I could care less about it. But I have to use it for an edge. I have to use it for some type of, confirmation at times. It helps me see the market a little bit differently because every individual sees the market differently. So this is me just going ahead and just mapping out the pre-market. You can see me, I'm going from chart to chart. I think this orange line that I'm doing here, if you guys are not joining the live stream, please join the live stream. Because in the live stream, I am mapping all of this out. Right now, I am looking for a high volume candle. And right here in this, where you see VOL, I'm looking for a candle that traded at a high volume. I'm trying to find that. So that's probably what I'm talking about to right now. So we're going to go ahead and move this along because I already put the level there, and then let's get to the actual trading session. Okay. So I already had a premeditated thought on Amazon, right? I already had a premeditated thought, and I want to find something to show you guys here. So as I'm doing this pre-market prep, right, you guys see these wicks, and this is why it's important. You guys are going to see me put a level here. These wicks is buying candles. Buyers stepped up here. So this is very important. I would like to see, and I'm going to pause it after I turn this purple line to a yellow line. Let's pause this. I would like to see price action retrace right there. I would like to see price action go near this price action, and I can short it or I can buy it. But my notion was to short it there. I started to notice this week of trading and a little bit of last week, we're starting to reverse a little bit, and the market is starting to sell off piece by piece. The bull trend is still very much intact in the market. I'm not here to go ahead and say, oh, the market is going short now. No, I think that the bull trend is very much intact. And I'm not a bull or a bear. I'm just reading the tape. So with all of that, as I'm highlighting this, I'm using this as my day's target to take price action down to those levels. So you can see where we're at. I'm going to pause again. Amazon fell on this day. We came to these levels and bounced back up. Now we went ahead and shooting back up, but based off what I've learned in the markets, right, and based off how I see the market, we are trading under this 200-day moving average. So we're trading under this 200-day moving average. I still have a thought process that this thing can go short, and we may want to retest this yellow level, which is 216. So then I can short it down to this level, make my profits, and then get out of there. If the market bounces and goes back up to the high of 226 and more, don't care. Because once again, I'm only here to trade it temporarily. I'm a day trader. I'm not an investor, right? I am an investor, but in this context, I am a day trader. So I'm just here to go ahead, take it down here, just make as much money as I can and get the hell up out of there. Don't care. I don't care about anything else. So also, I'm also going with the catalyst news, right? I already mentioned AWS. AWS had server issues on Monday, the 21st. And even with something as, I'm not saying it's crucial news, but even as that happened to AWS, go ahead and look at the daily candle. You see how we got this long white line? The market went up. Oh, well, the stock went up. So with the stock going up on that, then that can bring in some shorts to go ahead and now gain an edge and short that. Because nobody really wants to, if Amazon was already shorted, nobody wants to continue to short that, because then you don't know if buyers are going to step up. But the higher we go, then shorts might want to come in and kill those the buyers at the top, right? So that's how I went ahead and looked at the market. So now let's go into the actual trading session, right? So right when the market opened, I'm going to press play. Right when the market opened, maybe I was a little eager on this play, but I already knew I wasn't going to be aggressive on this. And this is what I was referring to in terms of position sizing, right? And risk to reward. If I go in one contract is not going to kill me. I already had a bias. I came in with an edge. I'm also looking at the level 2, right here where my mouse is at. I'm looking at time and sales. I'm looking at the daily. So not right away did I jump into the market. You guys probably can't see the clock. Okay, yeah. So we have a clock right here. We're 3 minutes into market open. I'm not running to jump in and make a position. I'm not. But I already, once again, have a premeditated notion that the stock wants to make a certain move. So I'm waiting to get in. And this is something that is key for most traders. Please be patient. So you guys can see here I jumped in with one contract. Why did I jump in? Why did I jump in with one contract? Because we're trading under this low volume. We're trading under this high volume candle. We're trading, and I'm looking at the trend, right? We're under the 200, we're under the 50, we're under VWAP. I'm seeing all of that. So I want a teaser or something. I want a taster or whatever, a tester. Let's go ahead and say that. I want a tester position. How is this stock going to react now that I'm in? I'm in early, but I'm only in one contract. So I'm going to go ahead and let this play out. So let's go ahead and fast forward this a little bit, because this is going to take some time, right? And we can see here, because my P&L, let me expand this screen a little bit more. You can see here, I'm up $23, $30. So could I have went in heavier? Absolutely. I could have went in heavier. I could have, just got a quick scalp, but that's not me trading effectively. That is me trading out of just straight earnings. I just want to go ahead and make money. I want to have the skill and the art of trading, right? I'm not here to just make the money and get out just like that, because that's how you miss out on bigger profits. So I'm only in one contract, and I'm letting that one contract just go ahead and play out. I'm not here to go ahead and do too much. Now, what I did do, and maybe I'm moving too fast on the recording, is that I added on this position now. I added a bit heavier. But when I added on this position, I added because of the influx of volume going into the short side. And I'm always thinking about a stop. In this little small box right here, this little small box, we can see here I have a stop order at 188. So I like to give my stocks, especially mega caps and large caps, about $1 stop, right? Which $1 stop off one contract is only $100, only $100. So when I saw this influx, let's fast forward it a little bit more. I already have my finger on the buy 3 button, because I'm trying to save my ammo. I'm not trying to put all my soldiers out there, but I do want my soldiers to be ready for war. to be ready for battle. So once I saw that we broke this 5-minute low, I'm pretty sure I added an extra 3 contracts, and now I got 4. And my stop is still up here above VWAP. If we was to break above VWAP and get close to this 200-day, I would have gotten out this position at a loss. But once again, pre-market assessment, news, catalyst. I'm repeating the same thing because this is what it is. Like, this is what it is. This is trading, right? And now I'm gonna go ahead and I'm gonna wait a while. I'm gonna sit. I'm gonna be in some blood. I'm gonna be in some red. I'm down 125. I'm down 113. Just follow my mouse. I'm down money, but I'm not looking so much at the P&L. I'm looking more so at the trade. I'm looking more so to see how is this thing going to play out for me over the course of time. I may have to sit in this for about an hour, 2 hours. I may have to go ahead and do that. I'm going to even flip through different time frames. My goal on this trade was to maximize my earning potential. Not only was that my goal was to add in some more contracts, right? Which that maximizes my earning potential. So let's go ahead and fast forward a little bit. My stop initially for that one contract never got touched. And the fact that my stop never got touched, that led me to go ahead and think to myself that, you know what, I think this thing can go lower. I showed you guys earlier, right? I showed you guys that there's a level down there, a yellow level at 216 that I found that was a quadruple bottom, that the price kept touching that point. So that's my target. That's where I'm trying to go, right? So let's continue to watch this, right? And I'm also looking at my risk to reward. You see, I'm going to pause it. You see how I'm right here at this red line, right? And that's the VWAP. This is a perfect risk to reward on the short side. Why is that? Because right now we're trading under pre-market low. This blue line is yesterday's low. So then now I would like to see price action flow and get down there. And if I was to buy some more right here and I see some good volume come in, then I'm able to jump inside this trade and then take it down there to 217. So good, and this is what I'm talking about in terms of risk to reward. This is a risk to reward setup. I'm probably going to add here soon. So let's go ahead and fast forward a little bit. I'm going a bit fast, but it's okay. I'm going to go ahead and pause from time to time. So boom, you see how now we got this large sell candle. You see here at this level 2 for Amazon, we got a lot of sell orders, and then these sellers are almost meeting. They're meeting the bids. And if you look at time and sales, you know, you're going to see how this price just drops. It just continues to drop. See, from 34 cents to 33 cents to 33, all right, to 29 cents. So I'm looking at that. So guess what I'm about to do? I'm about to add another 4 contracts. Okay, when I add another 4 contracts, I still got my stop order to right there for one of the contracts. And that will let me know that it's time to get out. That's why I have a stop order there, because it alerts me like, hey, listen, man, you might want to get out of this position. Now, as we are coming back to this level, I figured that we're going to get a bounce. But the market is not going to make this easy and just sell off. You know, that's yesterday's low. So are we just going to get to yesterday's low and break it and just give people money? The market is not going to sit there and do that. So you need to have, you know, some tough skin to be in this market, because you're in here with sharks. You're like, let me tell you this right now, the market is filled with sharks. So let's go ahead and fast forward a little bit again. And you guys are looking at my P&L. I'm down almost $500. And you see how we got back to the VWAP? I'll pause it again. You see how these buyers came and stepped up, and we're right back to VWAP. If we break all of this, then I'm out. But the fact that, and this is where people talk about trends, finding the momentum. This is somewhat of a trend to me. This is somewhat of a trend because the setup is showing a downwards trend with all of these moving averages. We're not trading above it. If we were trading above any of these moving averages, like more aggressively, I wouldn't be thinking that short, or maybe I'll still go short. I wouldn't be as aggressive as I am. But I am aggressive because of news, setup, pre-market assessment. Also, the order book. I'm looking at the level 2. I'm seeing sellers continuously step up. Just watch how all this red just continues to just get larger and larger and larger. And also market conditions. Now you guys also see I back up a bit. That target is not too far away. Yeah, so my camera just kind of like stopped for a second. So real quick, I won't stay on this topic for too long, but I see the level right there. So we're gonna go ahead and fast forward this a bit because my camera is getting a bit heated right now. But nonetheless, I want to fast forward this a little bit quicker because this trade took some time. All right. Go ahead, look at the trade. So I'm basically patient on this trade. I'm waiting the whole entire time for this thing to go ahead and get to my level. And you see how the downtrend is just steady, 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 steady. And it's looking like we're going to go ahead and break yesterday's low, and then we finally break it. And once we finally break it, I step away for a moment. I'm letting the trade go ahead and play out. I got my stop order in place. And then now we see how I'll go ahead and I'm at 300, 400, 500. We're getting closer and closer to my level. There's no reason for me to leave this trade. We just went ahead and broke the pre-market low. Then now it's time to go ahead and ride this thing out. You know, sit with it. Stay in it for as long as possible. And then we can see the high of this trade was $833. Now, did I walk away with that? No. You know, I did not walk away with that trade. I want to go ahead and fast forward a little bit more, is that this wick now comes into play. You see this wick? Once that wick comes into play, I'm like, we're getting a reversal. I already knew a reversal was going to happen. I should have cut some more profit. But what I did do, because I am going a bit fast here, is that I took some money off the table. You know what I mean? Like I did, because if we look right here, I got 12 contracts. Go ahead and look at this with the box right here. Once we got close, I already took three, I sold. So now I locked in some profit. Maybe I might come up here and show you guys to what that was. Let me see. I'm waiting for me to go ahead and see if I showed you guys the realized gain on that. But what I am doing is key. I'm moving my stop. I'm moving my stop order. I'm moving my stop order so I can lock in some more profits. Then now I pause and look at my day realized. I know I got my face there, but you guys see 406. That's realized. So then now whatever happens is what happens. I already took some money off the table. So this is my best trade in the week of in this week of week 4. Now my worst trade is right here. My worst trade is because I lost $500 on MU. And the reason why I'm saying this was my worst trade was because I went ahead and I'm going on the 2 minutes, so focus on this chart here. I had a put option at 1039, 1038 or something like that. So let's go to time. So right around here, I put in a put. I figured that this thing would sell off a little bit more. I looked at the daily chart this day and I was looking for a second day play. Because if we go ahead and look on the 21st, you can see here, oops, my mouse is going a little crazy. Yeah, my mouse is going a little crazy. You can see here that it's sold off. So I'm thinking we could get a second day play, but we did not break my key level at 200. And when we did not break my key level, I probably was a bit aggressive on this play, and I held it on and I cut it. Once it got to the VWAP and broke, and here I went ahead and I just let the trade go. So I shorted it. I shorted MU. It didn't work out. It didn't follow my strategy, and then I just ended up taking a loss there. So real simple to break down on this one. I don't have a recording because this is the Tuesday when I don't record. But this was the day that I went ahead, shorted around 1038, 1039, hoping for continued to move downward. I didn't get it, and then it got here to my stop, and then I just took a $500 loss there. The issue with this trade, I will say, was that I could have left sooner. I probably should have left right when it broke the VWAP and it got here and it got to this white to level, but I kind of waited too long to get out. It was still a good loss for me because I followed my rules, but nonetheless, this is how trading went for me. So please, a few things to learn today. Do not mix up your swing trading with day trading because hence, as I showed you guys on this screen right here is that it can really jack up your week. You know what I mean? Because if I'm showing you this little box right here that I made 283, and this is proof that this is 1015, and I ended up leaving that day with 343. If I would have never swing traded, that 283 would have been mine. So do not go ahead and mix up your accounts, right? And always have a proper risk to reward position sizing. Start off with a tester contract. See if your theory is even correct, right? And then also I'm just looking at my notes here to let you guys know. I think that's pretty much it. I don't think I have any much else after that. Just not mixing up position sizing and risk to reward. Those are the three things that I have for you guys today. So to go ahead and close out, just continue being patient. Continue to have a great pre-market assessment. Join me on my lives, right? Risk management is always going to be key, and that's why I put that on the title today. Risk management is what's saving the profits that I have for this month of October. All right. So, guys, I'll see you guys on the next video. Thank you guys for joining, and I'll see you guys on Monday. Please like, follow, subscribe. Check the deuces up. Peace and love. We out. Peace.